Hey traders, John Howell here, your number one market trader. Oh, it's going to be such a great and exciting week. If my grammar is spot on, let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so traders, I'm giving you a free trading course, plus also a free training, plus also webinar. It's a whole sort of master trader bundle I'm giving away. There's like 5 phases in the trading course I'm giving away and a whole bunch of down home country goodness. If you need help with any of your chart reading, trading systems, maybe some of the mindset stuff, maybe some trade management stuff, maybe you want to learn my trading system, how I actually trade the markets, then first link in the description, guys, grab all that, go grab it all, go grab it all. It is for free, and you'll be able to get it, you'll be able to see all that straight away. So let's actually go have a look at what's going on with across the markets. And boy, oh boy, am I so excited. I'm so excited and I just cannot hide it. You know, I want. What's that song? You know that song, right? Anyway, so this market traders right now is the big thing that really always that I think about when I'm looking at these markets is the big picture, right? Because the big picture really gives us a bit of a telltale of what's going on, right? And a lot of the times we can get fooled by short-term movements over a few week period. That's going to fool us, right? So a lot of the times when I first started trading, I would just be focusing on charts that look like this, right? So I'd zoom in like this. Let me do this here, right? Actually, you know what? I'll go to a blank chart. So I'll make this much easier for you, okay? So I used to look at, actually, you know what? No. When I first started, I used the green candles, okay? But I'd zoom in for a good couple of months, maybe 1-2 months, and I'll be zooming in like this. Like, oh, it's a down bar, it's a down, right? And now, oh, burping all over the place, Soshi. I just had a green drink. So the big thing that I realized when I was actually trading them, when I first started trading 18 years ago, and one thing that I didn't really understand was that the market is always telling a story. And the one bar, yes, I look for a really good bar to get in on, right? So I look for a good trading setup, a good trading pattern, and then I look for a good bar to get in on. Again, when I spent a whole hour just walking through my trading system. So if you go to johnsfreegift.com or there's link in the description, click on that, you'll be able to see all that sort of stuff, right? You'll be able to get all that. But the whole thing is that yes, I do look for that. But if I'm trying to get an understanding of what is going on with the market, I can't see much about where the overall flow of the market is. And again, traders, it took me a long time to really understand what I'm trying to teach you here right now, okay? But it's so powerful in helping us understand what's going on, right? And so for me personally, the rule number one for me personally, when I'm trading the markets is, what is the trend of this market? What is the trend of the market? Is it a downtrend, meaning the sellers are overall in control, right? Or uptrend, where the buyers are overall in control? Now, the thing is this, is that a lot of people think, oh, if the market's in a downtrend, these points through here where the buyers are not in control, sellers not in control, sellers are not in control. And that's not true, right? It's just the nature of the beast, right? If they're selling it off, and then they want to buy it back, they buy it back, make profits, then sell it off, buy it back, make profits, sell it off again, buy it back, right? So the overall theme here is that the overall trend is down, right? Even if you forget the whole terminology, sellers in control, buyers in control, or just remember the terminology of where is the trend? Are we stair-stepping down? Are we stair-stepping up? Or is there no one in control, right? Where it's just doing this. So that's what we want to be focusing on first and foremost before anything. So remove all those barge ass indicators. As you can see, I don't have anything on my screen right now. And because that's not the most important thing. The most important thing to me is looking at the market itself. So the best way that I like to do that, I like to use candlestick charts for my entries and so on and so forth. But the best way for me to do that is one, let's bring up an actual a bar chart. And the best thing for me is, again, guys, I don't like to have green and red bars on there when I'm trying to read the markets. When I'm trading the markets, yeah, okay, so I'm looking for a good pattern and a good bar, right? But if I'm trying to get a good flow, I'm trying to remove all the stuff from the screen. And then what I'm trying to do is I'm trying to open my charts up to see what's going on. So I don't want to have red and green on my charts. I don't want to have horizontal lines. I want to make it very nice, clean, and simple. See, a lot of traders, you may be the same, right? You may have a lot of lines that look like this right now, right? On the screen, there might be red and green candles on the charts. There might be trend lines going on. Oh, look, here's a trend line here. Here's a trend line here. Here's a trend line here. You might have the Bollinger Bands happening. You might got the stochastics down the bottom here. You got the volume down the bottom here. You got the Kelter channels happening through here as well too. See how messy that is? And the one thing that I've learned over my last 18 years of trading the markets is that we just really need to remove everything so we can see what the market is telling us, not trend lines or all these other indicators that are a derivative from the main thing, which is the chart. Let's remove all the derivatives and let's actually go to the main thing. Keep the main thing the main thing. What is the main thing? The chart, right? Because all the indicators are mathematical calculation of what the chart is doing. So if we remove that, and even the volume, I don't need the volume right now. I like to use volume when I'm trading, but even when I'm looking at the markets, I'm not doing that. So what I'm going to do now is I'm going to zoom my charts out. So as you can see, right, instead of me going for 1 or 2 months, I can't see the trend. What's the trend here? Oh, maybe slightly up, but I can't see the overall trend, right? So we zoom out, zoom out, zoom out, zoom out, and I need to zoom out so I've got real small bars. See how they're really small right now? And what's that going to do is that's going to give me a bit of a flow on what's going on. Oh, so I can see, we had a bit of a move down and we had a move up and then we had a move down and we had a move up and we had a move down and we had a move up and we had a move down and had a move up and now we're having a move down, right? So what can we see through here? We can see what? The trend. See how I'm not focusing on the individual bars, but I'm focusing on the trend of this. Now, what can happen is that we go from a downtrend to an uptrend. And so we go from making lower highs, lower highs, lower highs. But what happens if we come back up here and we don't make a lower high? That's now a higher high, right? So what can happen is we make a higher high, and then if it comes back down and creates a higher low, now we've got a new uptrend here. So we need to have the higher low in place first to start the upward trend. Because what can happen is that we get this fake out and then it just continues down from there and we never get the higher low. That's why you never want to preempt what's happened in the markets. It actually happened on this actually happened on the Dow Jones. It gave actually a bit of a fake out. If I go back to the Dow Jones, it actually gave a bit of a fake out here. So let me just I'll take everything off the screen there, right? So was it the Dow Jones? S&P 500. S&P 500. There we go. Yeah. So the S&P 500, as you can see, right, it actually came down. All right. Lower high, came down. It actually ran up, created a new high. So we weren't actually in a stair-stepping down fashion. And then the market dropped, right? We're doing the exact same thing right now, right? We came back up, lower high, came back down. We just broke above it. So as you can see, we just slightly broke above the high here, and then the market dumped. But this is where we need to be cautious, right? We need to be like, okay, is the market going to hold here somewhere and create that higher low? And then if we do something like that, now the market's telling us we're probably starting to bottom out a little bit. But because we didn't do that, we just kept going down. Come back up. Is this going to be another little fake out? Is this just going to be another little fake out like it did back here? See how it's the same sort of pattern, right? Now we're breaking back down. So that's where right now the overall movement on the is on the downside when it comes to the stock market. And we don't want to be preempting whether the market is going to start that upward trend. We do have a higher high right now. But now remember what I said before. If the market comes down through here, and this is where we need to really be cautious. Yes, there's going to be a lot of blood in the streets this week, right? I believe there's going to be a lot more selling coming into the markets this week. And I believe that. But I'm not too quite sure whether we're going to make a new low here, right? We may or may not, right? But we really need to wait for the market to tell us that. So right now, yes, the overall downward movement is in control. Overall downtrend is in control. But if we start to get this through here, if we start to get a higher low and then we start to do something like that, It doesn't matter what we think about the Fed, or this doesn't make sense and that doesn't make sense, and what about this and what about that, and the white paper and the report and Peter Schiff, and doesn't matter. Main thing, right? We need to be watching what the market is telling us. If we do get something like this happening over the next few weeks, then guess what? We're probably going to go through a big strong rally towards the end of the year. But if we don't, and we continue down through here and we start to get some really strong movement coming down like that, and we get back down to say the 3,800 level, probably around that level there, maybe even down near the low, say 3,700, then yeah, we're probably going to spend a lot more time coming down, and we're probably going to go down towards the low threes, right? 3,200, 3,000 on the S&P 500 as an example, right? So that's what I'm looking through there when it comes to the stocky market. Let's go have a look at gold and silver. And same sort of thing. What are we doing right now? We are what? We are in a downward trend, aren't we? And every time we've got this lower highs, and then a lower high, and then a lower high, and then look, we're still getting lower highs. So until we start to get a bit of a higher low, if we do get higher low here soon, then guess what? The trend has started to change, and then that's when we can start to look at the trend for a trading purposes. If the market does start to do something like this, then guess what? The buyers will start to come back in, and then we're probably going to go for a move to all-time new highs. But if the stock market's going to sell off, then maybe, just maybe, so are the mining stocks and gold and silver as well too. This is silver as well too. Silver's at the all-time new low for the year. And as you can see, it's just continued to down. We did break out of this big, strong range through here. Big, strong sort of range. And now we're actually starting to trend through here. So 1, 2, we've probably got a lot more downside to come when it comes to the silver market. Move over now through to the good old mining sector. And, I'm looking at the mining sector. And even though the mining sector is still looking really weak right now, and we're probably going to go through another downward leg on the mining sector. The mining sector absolutely getting crushed, but I see big things coming the rest of this decade for the mining sector. It's just this is probably a really good long-term buying opportunity. I don't know. I personally believe it is, but when I say long-term, I mean 2030 view, right? 8 years away. So don't be buying it now and then a week later like, oh, John got it wrong. He didn't go up. You little monkey. No. Little bumblebee. That's not what I just said, right? I said I believe right now the mining sector is a really good time to be buying for a 2030 view. Why? Because over the next few years, I believe we're going to start that really upward trend. I don't know when, I don't know how it's going to happen, and so on and so forth. I'm very, very confident in the metals and miners making one of the greatest moves in history. We're talking like 4, 5, 6, 700% return in growth. That's what I believe, right? And and possibly even things like the GDXJ, which is the junior miners, which is a lot more volatile, generally speaking. Something like the GDXJ could do possibly 1,000% up leg, right? You think the good old Bitcoin, the crypto market, was big the last couple of years. You haven't seen nothing yet, right? You haven't seen nothing yet. You wait. Come 2030, watch what's happening with the mining sector. And you know what? You know all those talking heads in the last couple of years? Oh, crypto, right? Guess what's going to happen in the next couple of years? Oh, money sector, gold, silver, money sector. They're going to come out, the chipmunks are going to come out about the mining sector and gold and silver. Why? Because we're going to be to the moon. But, that's the good old but there. Guess what? Maybe on the short term, we're going to be what? We may go through another bit of a dip. We may go through another 10, 20% dip. So when I say long-term buying opportunity, I'm saying, you know what? This is where we're heading. The big macro scale of what's likely to happen is here. I don't know when that's going to happen. That's not trying to time the markets. So that's what I say there, okay? But when it comes to trading purposes, guys, that's a different kettle of fish. Where does that saying come from, guys? Leave a comment below. That's a different kettle of fish. Where does that saying actually come from? Kettle. It's a different kettle of fish. It doesn't even make sense. You can't even put a fish in a kettle, because if you put the kettle on, you're gonna burn it to death. Kettle of fish. Anyway. Barrel of, am I actually saying that, am I saying the terminology right, guys? Anyway, leave a comment in the section below. Let me know what the kettle of fish, or maybe I've got it completely wrong. Leave a comment in the section below. So that's what I'm seeing through there, traders. And let's go have a look at the good old crypto market. The crypto market's about to get smashed, guys. We are going to get hammered. All right, big down movement coming in the crypto market. We haven't seen nothing yet, right? We're just getting started in the crypto market. So let's have a look at this here. So looking at the good old Bitcoin. This is the good old Bitcoin, and I actually did a post for my good old private client. And so if you're actually interested in becoming a private client, guys, just email me at Hal, my last name, trader@gmail.com. And then we can schedule a call to actually talk if you want to interested in becoming a private client of mine. But the whole thing about this is I was talking to my private clients. I'm like, oh, look at Bitcoin. I was looking at the 4-hour chart, and when the 4-hour chart was doing this through here, when we started the pullback through here, I'm just like, oh, traders, and I've got a strong moving average. I'm like, traders, this is not looking good, right? We're about to drop in the market, drop, okay? So, and then we did, right? We did. Traders, I just get excited about this sort of stuff, and we did. And guess what I believe this is? I believe this is now the start of the next move down with the Bitcoin, and we can see also the short-term moving average, and I believe we're getting ready for a movement back down towards the 10,000 level in the crypto market there. Looking at Ethereum, same sort of thing. Ethereum is dropping back down. We're starting to get a lot of weakness through here on the Ethereum as well too, right? We've got this sort of big, massive head and shoulder formation now forming on the 4-hour on the Ethereum. So we had this sort of shoulder, head, big shoulder formation. And so if we look at Ethereum around the 1,500 level up to around 2,000, so that's a $500. Project that down, you got around about that $1,000 level is probably where Ethereum is on its way down to. Now, by the way, guys, when it comes to the good old Bitcoin and the crypto market and so on and so forth, after this washing effect of what's happening right now, I believe if we're looking to put a small portfolio aside, maybe you want to grab a couple of grand or something like that, or maybe even $1,000, right? You say, you know what? When this crash does happen, and we're going to get the big washing away effect and the big recession, I'm going to find maybe the top 20 crypto markets, and I'm going to divide, whatever, right? You may put $1,000 in if you want to. If you've got a bit more money behind you, maybe 10 grand or something like that, and put 10 grand into an account, and then split that 10 grand up into the top 20 cryptos. And guess what? Probably 20 to 30% of those 10, 20 years from now are gonna be banging profits. You're probably going to get 20, 30% of them are going to become bankrupt, so they're going to disappear. And then you're going to get the rest pretty much doing okay, but not really good, right? So, but you just don't know which ones. Is it going to be Ethereum? Is it going to be, like, we just never know, right? So that's the way that I'm going to be playing Bitcoin for, I believe, because if I'm going to be playing the crypto market. So right now I'm actually looking to short the crypto. All my profits on Bitcoin have been short. I've been making all my profits on Bitcoin short in the markets. That's what it is. Actually, that's not true. I did buy Ethereum when it was at 400, and then I wrote it up to around about 900 to 1,000. That was actually a trading opportunity. Anyway, so the whole thing about the crypto market, guys, is yes, this whole probably next 6 months or so is going to get really ugly, really, really, really ugly. But just like back in the tech days when we had the tech boom and the tech bust, guess what happened? 10, 20 years later, that became a mainstream part of our lives. So I will be personally putting money into an account, just putting it to a side, separate account, where I'm just going to buy it, and that's like a long-term investment for me. I'm not going to look at it short-term. Like, I don't really care about short-term, and I'm just going to buy, and I'm going to hold that for 10, 20 years, maybe longer. Right, because there is going to be, out of all the cryptos, there is going to be an Amazon, there's going to be a Google, there's going to be a Facebook, there's going to be, what am I missing? A Netflix, right? There's going to be the tech sector, as I was saying, back in 2000, right? Where are we now? We're 20 years later after the 2020 bubble, right? Okay, so we had the 2020 boom, dot-com crash, right? Then 20 years later, guess what? Now out of the ashes became what? Became these giants, and that's what's probably going to happen. And we're going to see probably big things coming your way with the crypto markets, because we know this is the sign of things to change the way our system works, and the crypto market and digital currencies and all that sort of stuff is going to be a big part of our lives. So when it comes to the long-term stuff in our lives, the long-term view when it comes to the crypto market, I believe it's going to be very wise, and I will be doing this even for my kids, right? I'm actually even doing, like right now, I'm setting up a couple of different accounts for my kids. One one account is going to be buy and hold for crypto markets, and I'm just going to, they cannot touch that until they're like 40 years of age or something like that, or 30 or whatever, and then I'm going to be setting up another small account for them. And guess what I'm going to be buying in that? For the next 10 years, it's going to be focusing on gold, silver, mining stocks. And then get buy and hold, let it go, right? Because guess what? By 2030, they're probably going to... Now, it's not going to be my money I'm doing it, right? They've been saving their own money, so I'm going to be taking half of their money they've been saving and putting into the accounts, and then I'm going to let that go. And then the other half, they can spend whatever they want to. So right now, my kids have got... Or by the end of this year, they'll have close to $4,000. About $2,000 each. I'm going to be taking $1,000 from both of them, putting it together, and either creating two different accounts. One account for the crypto market, or one account for the mining sector. Or maybe right now, as things are unfolding, maybe I'll just focus on one account, which will just be the mining sector for this year. And then maybe as things unfold, I'll create a crypto account. But that's my long-term view as I'm talking about here, guys. As again, I have my long-term views to capitalize on these big macro trends that are happening, and I'm not trying to time the market. We're going to go up, down. I might buy a mining stock today and it goes down 10, 20%. I don't give a rat's ass, right? It's not about that. I don't care, because I'm very confident, very, very, very confident. Things like silver, things like the GDXJ, things like some of the mining stocks are going to be absolutely going crazy. Absolutely crazy. And we're probably going to see 2, 3, 4, 500% gains, maybe bigger, by the end of this year. I'm not guaranteeing that, guys. Obviously, I can't guarantee that. And maybe over the next 12 months, maybe next couple of years, it's going to do nothing, right? It may even go down a lot more. So, but that's my overall thesis when it comes to my views and what I'm seeing right now. And there's also a bit of a pep talk for you guys that thinking long term. Even if you're a young kid right now and you're thinking, maybe take $500. Maybe take, if you've got like a couple $1,000s in it, maybe just take $500 and open up an account separately, and just go buy some gold, silver, maybe the GDXJ, right? Gold, silver, GDXJ, just buy that, split it up, split the $500 up between, the gold, silver, maybe buy the GLD, the SLV, and the GDXJ. Just buy that and just say, you know what, I'm not touching this until 2030. The rest I can do whatever I want. If I want to go day trade with it, stuff like that. And then I promise you that small little account there is going to be, you're probably going to have a big smile on your face come 2030 when everything... Because the reason why I say the mining sector and the gold and silver and so on and so forth is everything's starting to really heat up, right? And we know there's going to be a flight to safety big time when the whole thing comes caboodle down, and we're getting very, very, very close to that. Gold, silver's going to go bonkers, guys, when the whole thing comes coming down. Now, when I say coming down, we know that we're getting very close to the dollar crashing. When I say close, guys, maybe a few years away, or it might be 2030 by the time that happens, right? But within this decade, from now to 2030, the dollar's going to absolutely be hammered. It could be 2028, right? I'm not saying right now. Don't ever think, what I say right now, it's going to happen tomorrow. And no, things take time, okay? But when that does happen, guess what's going to happen to gold? Whoo-hoo-hoo, up we go. But I believe gold's going to whoo-hoo-hoo, right? It's going to go whoo-hoo. It's going to up we go before that. Because in the next crisis, which I believe we may be already in right now, guess what? In the next crisis... Guess what's going to actually happen to gold? Gold's going to go bonkers. Why? Because inflation is going to be out of control. Like, you think inflation's bad now. Wait till they do the same dumbass shit they did back in 2020. Which, by the way, guys, if you saw what actually happened back in 2020 when they did the printing of money, what happened to asset prices? So keep an eye out for that, because what's going to happen to asset prices as they keep coming down, and then what's going to happen to asset prices again when they come out and do that big, they do another big spending package, right? It's actually pretty simple. If you're looking for a really good time there, like people say, John, when's a good time to buy? I'm just like, just wait for the headlines to say they're putting trillions of dollars back into the market again. They do another round of QE to help people out. As soon as you hear that, buy the market. 12 months later, you should do okay, right? It's actually not that complicated when you think about it. So anyway, traders, that's enough for me. I've ranted on too much. Anyway, guys, if you need some help, link in the descriptions, and I'll see you real soon.